All right. So Google has their earning report coming out later this week, Wednesday to be exact. So as you know, this is earnings season, and this week we have a lot of tech companies reporting. So Google is reporting, Tesla is reporting. I mean, Tesla may not be a tech company, but I feel like it is, right? So in this video, we're going to dive in and do some analysis on Google. We're going to take a look at the technical analysis. We're going to read a report by Morningstar to kind of find out what's happening on the fundamentals. And then we're also going to take a look at the macro regime and find some really good earnings plays on Google. We're going to put those on in our paper trading portfolio, and we're going to track the performance of that next week. So stick around, stay tuned, and let's go ahead and dive in. For those of you who are new to my channel, I'm Prosper Jonathan, former hedge fund manager, now the founder of TradeTonic. TradeTonic is an options intelligence platform that delivers high performance options intelligence, converting macro and quant insight into consistent high conviction trades. Right, so there's no other platform on the market out there like this, and I'm going to spend some time just kind of showing you how I use TradeTonic to help me with my portfolio and finding consistently profitable trades. And hopefully you'll find some insight from the video that's sharing right now. Let's go ahead and dive in. So as you know, if you've been watching my channel, we start off with the dashboard. And another thing I want to ask you guys, go ahead and subscribe, hit the subscribe button or hit the like button. That really helps my channel. And that's all I ask of you. Just hit the subscribe button, hit the like button. I have 4 followers right now. I'd love to get that up to 10 followers. So if you're watching this, just hit the subscribe. I'd love to get up to 10 followers by the end of the week. That would be great. All right, let's dive into Google. So first, let's take a look at, before we go into the dashboard here, let's go look at the chart, right? So we're going to look at the technical, some of these indicators. So I like to look at the 50-week or the 50-day, the super trend, but let's look at the weekly. Let's look at the weekly chart here. So we see Google is really holding this really strong trend line here. So of course, you know, it's constantly setting higher highs and higher lows. So I really wouldn't be looking to take a short position on Google. If we go and take a look at the S&P, just kind of see where we are, right? We're still at highs, but kind of flagging a little bit, maybe finding some resistance there. I mean, the VIX is at around 18.76, so there's some volatility there. So let's see what we like about Google, right? So from a technical perspective, looks like there's some really strong, I'd say like this area right in here is a key area, right? That's a good area for support. So we got a trend line support is holding here, and then we have some, you know, another support resistance line right here around 333. Right now Google is trading at around 347. So I wouldn't anticipate for this to break to the downside, to be honest with you. Let's go ahead and put some indicators on here, right? So Google is over the 50-week moving average. It's over the 200-week moving average, so that's bullish. The RSI is pointing to bullish. The super trend is bullish, right? So, um, and over 346, I believe, over 346, there's no resistance on the super trend above it. So Google looks really strong. Now we go to the daily. The daily, it's a little bit iffy, right? So we were just looking at the weekly, but now on the daily, we're below the 50-day, but we're above the 200-day, right? And looks like we're trying to still hold this area right in here. Looks like we're at a demand zone, to be honest with you. See if I can find here we go. Yeah, looks like we're definitely in a demand zone. Let me see if I can find right in here, right? So this is definitely a demand zone that we're touching. So, and with the 200-day below that, I would anticipate that this would hold, barring any crazy news or anything that's happening from a macro perspective. So we probably have like a bullish sentiment for Google over 375 on the daily. Google gets over 375, and yeah, we could potentially see new highs for Google in the coming weeks. So it's a nice little pullback right here. Just gonna see if we hold. Let's go and take a look at the fundamentals here. This is an article that was written by Malik Ahmed. I'm getting notices here on my phone. Malik Ahmed with Morningstar. And ahead of earnings, is Alphabet stock a buy, a sell, or fairly valued? Let's see what he says, right? So he's giving a fair value estimate of around 433. Google is trading at 346, right? So that's about a good $80 difference there. 80 or 90 bucks difference. There's a 4-star rating. Now, what he says, okay, what to watch for in Alphabet's Q2 earnings. We're going to look for the Google Cloud growth in both quarterly numbers and contracted future revenue or backlog. We think investors want certainty that the 460 billion backlog will convert to sales over the next 2 years, right? So there's $460 billion of, I guess, receivables that they have or sales that's still out there that will trickle in over the next 2 years. The non-backlog factors such as consumption-based spending and commitments would be important for understanding the health of the cloud business. The cloud should be at the top end of its 180 billion to 190 billion annual capital expenditure guidance. So it sounds like they're reinvesting back into the company, which is really good. Their Google search and AI monetization via search remain crucial in our view, according to Ahmed. Let's go and see the fair value estimate for Alphabet. They retained their $433 per share fair value estimate on Google. You can see the stock is cheap and expect investors to appreciate the firm's multi-vector monetization opportunity and AI throughout the year. There are some concerns about Gemini falling behind at the frontier. They think Google remains competitively well positioned in the model layer and across the entire AI stack, that's including chips, cloud infrastructure, and applications. So the financial strength, you see, they have about 127 billion in cash with 46 billion of debt. So that's about a 3 times cash to debt, or cash to debt, which is really, really good. It's a really strong balance sheet. So the bulls say Alphabet's core advertising business is deeply entrenched in advertising budgets, allowing the firm to benefit from a secular increase in digital advertising spending. Alphabet has a huge opportunity in the lucrative public cloud space as a key cloud vendor to enterprises looking to digitize their workloads. Now, the bears say, while Alphabet is seeking to diversify its business away from search, text-based advertising remains the largest contributor to the firm's top line, creating a concentration risk. Alphabet's continued investments in new, often unproven technologies have been a drag on cash flows. Well, I wouldn't say that that's a downside approach, because they're spending cash on CapEx, like we said here. And in order to be innovative in tech space, you have to put money into innovation, right? You have to put money back into innovation. And so that $190 billion of CapEx going back into the business, I think that's really good. So let's go ahead and dive in. So overall perspective from the fundamentals and the technicals. So like we're kind of leaning a little bit more bullish for Google. Let's go to our earnings tab. Now we're back in the dashboard here. Let me go back to the main dashboard, right? So we're here in the TradeTonic platform. And one cool thing about this is we have an earnings section, right? So this part right here is just kind of shows the top plays for the day or for the week that's coming up, right? But today we're focusing on earnings, because this is earnings season and we love earnings season. We love the volatility. We love the plays that are out there and that's available, right? So here in earnings week, we have some really, really good reports. So we got Google, Tesla, and Intel reporting. But let's go to the earnings tab, right? So on Wednesday, we have Google and we have Tesla reporting. So we did a trade with Tesla. We did bull call spread with Tesla on yesterday. And we also did a strangle with Tesla on yesterday, right? So those trades are in the book. As soon as the market opens in the morning, they'll get filled, and we'll see how they perform, right? So I'm really excited about that. That was a really cool strategy. So we're gonna do the same thing with Google today. So let's go ahead, and the consensus earnings per share is around 289. let's go ahead and tap into the strategy builder for Google. So once you're in the earnings page on the TradeTonic application, you can scroll down and see what the earnings calendar is and choose which company you'd like to find strategies for. So like I said, we have like a more of a bullish bias for Google. And so let's take a look at some bullish strategies, right? So we're here on, there's an options chain. Let's look at, now we can do some weeklies that it's going to expire this Friday. So, you know, that's kind of like, we're definitely just playing the earnings, right? So we're not going out a couple weeks. Let's just do some weeklies expiring this Friday because earnings is on Wednesday. And so when they report after the close, we should see some activity on Thursday and Friday, which would give these options some time to really take advantage of the volatility. So we're going to look at some bullish strategies. We got the bull call spread. We have a bull put spread. Now let's just take a look and see which strategy, based on our quant models, says is the optimal trade for us. All right, so if we're looking at a bull call spread, this is saying we could buy the 345 strike calls with an expiration date of July 24th, and we could sell the 365 strike calls for premium wave cents, and we could buy for 405. So this would be a net debit of, what's that, 397. All right, so we're risking 397. But our max profit is 1603, right? So this is a 4-to-1 trade. We can kind of see that here. We'll see that whenever the stock gets to around 364. And let's go back to the chart, the technicals, right? So if we look here, the high of last week was 375. So the question of whether or not Google can get to 374 by next Friday, I don't know. The probability is actually pretty high. Now, I think if it hits 375, we're definitely going to hit some resistance there. So, and yeah, 364 is kind of right in that range. It's like right in here. The 50-day is at 370. So that gives us a little room to move, right? It also depends on what happens with the overall stock market too. So we got the bull call spread, which is a 4-to-1 trade. There's a 46% probability of profit on this particular trade, with the net debit, of 3.97. And one standard deviation move is about 10.2% negative or positive, right? So that kind of gives us what the price range will be. And we're looking at some calls at around 21 in the delta. So we're really expecting a big move to be in the 21 delta range. I mean 0.21 delta range, right? So let's take a look at the bull put spread and let's see. Now I'm assuming this is going to be for a credit, right? And so we're assuming that if we did this, then we would just say that that Google actually wouldn't really make any moves, right? That doesn't really make any sense. So we're not going to look at the bull put spread. If anything, we would look at the bull call spread, or we would look at some volatility plays, right? And so I think in this particular environment, doing a long straddle, which is very similar to what we did with Tesla, we can do a long straddle where we could buy the 365 strike, and we could also buy the 330 strike. Now, these are definitely far out of the money, right? I really don't know if I really like this trade because, you know, we're risking $23 or 23 cents per option contract, or just, yeah, per position or per leg, right? For the two legs. But I'm not sure if I really like this trade. Definitely the delta's really far out of the money. So I'm not sure if I really like that trade. Now, what we can do is let's see if we can get more in the money, right? So let's do, let's see if we can put this at 355. All right, and let's see what put this at 340. All right, so the probability of profit on that is about 83%. So in the delta still, we would have to widen the spreads, and I'm not sure. And I guess because these are expiring in 4 days and they're so far out of the money, we'd have to really widen the spreads for it to make sense, right? So we're not the strangle doesn't really work for Google at this moment. So let's go back to the straddle. Let's see what the straddle gets us. All right, so we would be risking around 653. So we would buy the 345 strike call, and then we would also buy the 345 strike put for a net debit of $6.53, or if we just do one contract each, $653. Now our max loss is 653, but if Google moves, I mean, Google will have to move about 10%, which is exactly kind of the expected move, right? One standard deviation move is plus or minus 10%. So that kind of puts us right in the ballpark. So we could say if Google does move to 370, then we're looking at making about $1,900, right? Now, if Google goes down another 10%, we still make like another $1,900, right? So I like the long strangle. I mean, the long straddle for this particular trade. Let's look at the iron condor. Iron condor. No, not really for Google. I'd probably say that the best strategy we could do right now is the long straddle. So let's add that to our paper trading portfolio. So we're gonna do the long straddle on Google, the July 24th expiration, right? We're not gonna do 12 contracts, absolutely not. Maybe let's do one contract. So we're gonna risk $653 on this particular trade. And we're going to look to make, like I said, our target is to make Google moves 10% to around 370. We can make around $1,900, 10% on the up or downside, right? Now, the thing is, because one reason why I like doing the straddle is because we know Google's not going to stay at the spot price. It's definitely not going to do that, not with earnings. And that's why kind of doing some of these strategies really makes sense. So let's add this to our paper trading portfolio, right? So we're going to go into our paper trading portfolio. We see that here. We have Google, the long straddle for Google, and we have the Tesla trade that we put on yesterday. So we're going to come in on tomorrow and see how we get filled. And yeah, let's just test this out, test the strategy out. On Thursday, Intel is reporting. So we may do a trade on them. And then next Tuesday, we have Boeing, Coke, PayPal, and Visa. So I think the PayPal and the Visa trades may be really good. So we'll go back and take a look at that later. So that's all I got for you guys today. So we put on a long straddle for Google where we bought go back. Let me just make sure so I can show you guys. All right. So we bought the 345 call and we bought the 345 put, right? And this is going to expire July 24th. So if you like the trade, put the trade on. If you like the content, be sure to like and subscribe. Follow my channel because I'll be on here every day sharing with you guys how I look at the market, how I approach trading, and how I'm using tools to help me find consistently high conviction trades in the markets, right? So like I said, TradeTonic is a high performance options intelligence platform where it converts macro and quant insight into consistently high conviction trades. So if you're looking for consistent trades, if you're looking to be a consistently profitable trader, and you're like, I really like the math, I really like doing the work, but I would love a system that would just do it for me faster so I can find more trades, I could do more analysis, right? Spend more time with my family, travel, do all those things, then TradeTonic is exactly what you're looking for. We're having our beta launch August 1st. Go to the site, sign up, and once we release it, then you'll be able to go ahead and access the platform. You get a free 7-day trial, no credit card needed, and yeah, I look forward to having you. Like I said, follow the channel, like and subscribe, and I'll see you guys in the next video.